Today we're going to look at the issue of HOAs that have never filed tax returns. There are thousands and thousands that have never filed a tax return, so unfortunately it's a very common situation. Typically there's a change in management, there's a small self-managed HOA, and someone asked the question whether or not an HOA needed to file the tax return. So, this is typically uncovered after several years, and there's a lot of panic that comes into place when someone determines that an HOA should have filed the return. In this video, we're going to take a look at 8 specific things that you need to do if an HOA has never filed a tax return. These are going to be very critical if you're going to solve this issue and get it done while minimizing any sort of penalties and issues. So number 1, most importantly, sounds very basic, but realize that you've got a problem and it won't go away on its own. Number 2, gather all financial statements. This would be a P&L and balance sheet for each year. You may need to actually get in and take a look at any bank statements. Number 3, review any and all IRS or state correspondence. There may have been letters sent over the years inquiring about tax return status. Number 4, locate the last tax return that was filed. Again, this is not going to be applicable if the HOA has never filed a return, but you may find that a return was filed many years back. Make sure, in addition to this, that you do have the EIN number or the tax ID number for the HOA. Number 5, hire or locate a CPA who has experience dealing with HOAs. Probably 90% of CPAs don't have a lot of experience with HOAs, so make sure you ask the question. In fact, a lot of CPAs don't have a lot of experience dealing with unfiled HOA tax returns. So make sure you hire someone who has the experience. Number 6, review all the financial records, all the IRS letters, discuss them with the CPA or tax professional, and establish a game plan for how you're going to go and get all returns caught up and filed. 7, get the tax returns themselves filed, as well as the state tax returns. Wait for any IRS assessments or state assessments, if any. Typically there's not going to be much because HOAs will qualify under 528 or under 1120. They won't have any net income that's going to be taxable. Number 8 though, make sure you deal with any sort of penalties and interest. Again, a lot of times there's not going to be any sort of penalties because the HOAs don't have any taxable income, but make sure you discuss this issue with the accountant or CPA. Remember that HOAs who have never filed tax returns, this is a very common situation, so definitely don't panic. Make sure you get everything pulled together, discuss it with the board, discuss it with a qualified CPA that can help you, and get all your returns caught up as quickly as possible.